Good morning, everyone. Thanks for joining the weekly research morning call. Sorry, there's a typo on the slide. It should be 11 a.m. Yeah, as usual, we'll have some stock country updates followed by the technical pulse and Singapore weekly. So without further ado, I'll hand over to Jonathan to present on NVIDIA. Jonathan, please.
Thanks, Mel, and good morning, everyone. So I'll just begin by talking a little bit about NVIDIA's first quarter of fiscal year 2025 results announced a couple of weeks ago. So overall, results outperformed again. For the last year or so, they've continued to benefit quite heavily from surge in AI demand. You look at their first quarter revenue and PATMI, this came in at 25% and 28% of our 2025 or fiscal year 2025 forecast. Revenue of 26 billion beat its own guidance by about 9% or roughly $2 billion, while their PATMI jumped 7 times. So very significant difference in performance. Most of this came from their data center revenue, which is essentially all their AI GPUs, so their Hopper H100, H200. And this continues to be the main, the main story, and continues to support our investment thesis for NVIDIA. When you look at their first quarter results, at the same time, it also implies about a $4 billion sequential ramp quarter on quarter in terms of supply. So if you didn't know, NVIDIA is just heavily supply constrained. There's just way too much demand at the present moment. So they can really their revenue only grows as fast as their supply grows. And for the last 3 quarters, they've been increasing or seemingly increasing their supply at this $3 to $4 billion pace. We expect this to continue throughout 2025, especially with their close relationship with TSMC, which is their main chip foundry, chip manufacturer. So aside from the increasing demand as well as their constant efforts to improve their supply chain, NVIDIA also is recently announced that they're going to have another product launch next year for AI GPU after Blackwell, which they recently announced. And they'll be conducting a yearly product launch. So they're kind of accelerating their product launches to be on a yearly basis. And this is essentially to kind of continue outpacing its competitors, AMD, even some of your big tech internet companies, like Google and Amazon. The main concern for this is that, as you keep on launching new products every year, the main concern was that their current customers would actually just wait, maybe for the next new or next better product. And that will significantly impact near-term demand, or at least demand in the current 3 to 6 months. And NVIDIA said that this wasn't the case because of where everybody is in terms of the early stages of their AI build-up. So a lot of their customers, you talk about the big hyperscalers, Amazon, Microsoft, and Google, for example, they're early in terms of building out their AI infrastructure and their AI capabilities. And so they can't really afford to wait for the next newest product. They kind of have to just keep averaging into the current technologies. And so, for example, they'll set aside maybe 20% of their budget, or maybe 20% of their 10-year budget for this year's GPUs, and then maybe 20% for next year's GPUs. So they'll continue to just keep ordering and keep buying GPUs, especially because they need to build out faster. Because essentially the AI race has just begun in its early stages. So very minimal risk of product transition. At the same time, their newer products will also be backward compatible, so it's easier to upgrade for a lot of their customers. So it wouldn't really be that much of a hassle for them. In terms of their outlook, NVIDIA guided to continued growth in revenue guidance, at least sequentially. So they expect about $28 billion for the second quarter of fiscal year 2025. Although we think that they so far they've tended to under guide, and so we think this number will be closer to 29-30 billion US dollars. Margins are expected to come down slightly, mainly due to a normalization of component costs. So the company actually benefited from lower component costs in the fourth quarter of last year and the first quarter of this year. But this has since normalized, so you expect gross margins to come down a bit, at least for the foreseeable future. We think that in the near term, demand is still very robust and near-term growth expectations are still very sustainable. So we're not really, given the latest commentary and seeing how most of our customers continue to pile into capex and continue to pile into ordering more GPUs and more AI infrastructure, we're not too worried in near term. In terms of capital structure, NVIDIA did announce a 10-for-1 stock split that will happen at the end of this week. So it will happen after market closes on June the 7th to all shareholders that on record by the end of June 6th. So aside from that, in terms of valuations, we actually raised our 2025 and 2026 fiscal year revenue by 14% and 38% to reflect a stronger demand and a stronger ramp in supply. We think that NVIDIA continues to have superior product performance versus some of its competitors, in particular AMD. While accelerating its product pipeline, it just goes to show that they're continuing to innovate at a faster pace compared to the rest of its competitors. So we raised our target price to $1,400 pre stock split, up from our previous target price of $970. So that's all for and we maintain a buy. Sorry. So that's all for me. I hand it over to Ambrish for Salesforce. Thank you.
Thank you, John, and good morning, everyone. So moving on to Salesforce first quarter results. So Salesforce, it's basically a software company and it generates most of its revenues through subscriptions for its products. So in terms of its performance, the first quarter revenue and PATB came in line with our expectations at 24% and 25% of our full year forecast. So moving on to the positives, the company, its subscription revenues grew by about 12% year over year. And this was mainly led by continued resilient demand for its core products, which are Sales Cloud and Service Cloud, which basically help to automate sales for the enterprises as well as to enhance their customer relationships. So the revenue for these products grew by about 11% year over year to about $2 billion each. So these two segments, they contribute about 40% of its total revenue. Whereas Data Cloud segment, it was the fastest growing and it grew by about 25% year over year to about $1.4 billion. And this was mainly because of the strong demand for its data integration software, which is MuleSoft, and analytics software Tableau. So management said that it mainly benefited from product innovations as well as its bundling strategies and multi-cloud adoption from enterprises. Secondly, the company, it's also improving its profitability. So its operating expenses in the first quarter, they dropped by about 8% year over year. And this was mainly because of high operating leverage. And this led to the operating margin to expand from about 5% last year to about 18.7% this year. And this was mainly because it's focusing on focus on measured hiring as well as lower sales related expenses. So last year they cut its employee base by about 10%, and this year in January reportedly it also announced that it cut its 1% of its workforce. So this is leading to the increase in profitability for Salesforce. In terms of negatives, for the second quarter of 2025, company has guided a revenue growth rate of about 8%. And this mainly came below the consensus estimates of $9.4 billion. And this growth it's the slowest in the company history. And we believe that this is mainly because of measured buying environment, which is leading to elongated sales cycle for the enterprises as well as deal size compression. So as a result, despite the weak outlook for the second quarter, the company reiterated its guidance for the full year of 2025. So it still expects a revenue growth of about 9% for the full year. And this is mainly because management, it expects the macro headwinds to be offset by, in the second half, it expects the headwinds to offset by its resilient demand for its data cloud segments. Whereas the company, it has slightly lowered its operating margin and GAAP earnings per share guidance range, and mainly because of higher stock-based compensation expense. And in terms of the company, it has integrated its Einstein Copilot AI, generative AI tool across its product base. But but we don't believe and we don't expect any significant contribution from it at least this year. And this is mainly because it's still in the early stages. So like this AI tool, like it basically helps enterprises like to summarize video calls or generate personalized emails or chat replies. So we don't expect any contribution from it at least this year. And also like the company, it has announced a price hike of about 9% last year in August. So across its product base. So we expect that to hit the existing customer base by the end of this year. And it should help to translate to increase its top line, and it should hit the existing customer base over the next 1 or 3 years, since most of the contracts are for long-term duration. So it should hit its customer base, and it should increase its top line. So in terms of valuation, we upgrade the stock to buy from accumulate, mainly because of the recent share price drop. And however, we lowered our target price to $305 from $323. And it was mainly because we reduced our revenue and PATMI estimates by about 1% and 2% to reflect the macro challenges as well as the high operating expenses. So in terms of catalysts for the stock, we believe that in the near term, it's the continued margin expansion as well as the robust free cash flows that it has been generating. And also there has been resilient demand for its like data cloud offerings, through which enterprises, they get a 360-degree view and connect the customer data across segments so that they can take better decisions. So that's all for me. Would now like to pass it on to Glenn.
Hey, thanks, Ambrish. Yep. So for me, there was a JP Morgan Investor Day about a week and a half ago. So just it was quite a long session. So just a few key highlights for me. We do maintain our buy recall rating with the same target price of $231.19. So just the first highlight, it was that the net interest income guidance had actually increased by $2 billion from the previous guidance that was given in the first quarter to now $91 billion. So this is, as I mentioned, is $2 billion higher than their previous guidance, as well as $3 billion higher than their guidance they gave in fourth quarter. So this increased guidance will be driven by the higher for longer interest rates. But then again, there was, of course, it will take some time for them to for the cost of funds increase to kick in. So that is also sort of what is bringing down the net interest income slightly. Their repricing pressure. Secondly, the CEO, Jamie Dimon, also mentioned several times during the call that he's cautiously pessimistic or even pessimistic on the economy and the outlook for the future. So the different reasons were given, and some of them, they range from geopolitical tensions as well as the persistent inflation, which he said that it could actually further increase the interest rates. So that's only a slight if for them. And also that the consumers as well as small businesses are also running out of excess cash, which was built up during the pandemic. So they see several risks in that area. For the share buybacks, they do not see any share buybacks increase, at least in the near future, mainly due to the current high share price that JPM has actually been facing. So that's a good problem for them, I would say. It has actually risen about 17 to 18% year to date. And even though they have currently around $54 billion of excess capital, they are not going to increase their current share buyback or repurchase program of around $2 billion per quarter. For the technology spending and expenses, they do see it increasing. So a bulk of the expense increase will be going into the technology expenses. It's going to be going up to 17 billion from 15.5 billion. And actually AI will represent a huge chunk of that. So now we have a value of around, they are putting a value of around 1.5 billion from 1 billion. So an increase of around 500 million. And they mentioned also that the AI will actually penetrate every part of the bank, and it will change every job. So basically every new hire into the bank will be trained on AI, and this will have the aim of reducing the mundane tasks or operational tasks in order to save time and money. For the other guidance that they gave, the investment banking revenue will be in the mid-teens for the second quarter of 2024, and this is mainly coming from the improvement in market conditions, as well as outlook for deals remaining healthy. For their market segment, it also seems it's also aimed to grow at around mid-single-digit percentage points, and this is coming from an aim to increase their current market share. So they currently have the largest market share among all the banks at around 11.3% of US retail deposits, and we are looking to actually grow their branches further, and they are aiming to cover 50% of the populations in each of the 48 US states. Yep, so they're actually looking to continue to grow their branch size, although it's currently actually quite big. I think they're second to Wells Fargo. Yep, so that's all I have for JPM and the Investor Day. I'll now hand it over to Mel for the REITs. Thank you.
Yeah, thank you, Glenn. We have Phillip on the ground for Yangzijiang Shipbuilding. Yeah, we don't cover the stock, so it's not rated. The Yangzijiang secured 3.2 billion new orders, achieving 73% of the total annual target. The company has stated that there's no plan to revise the target upwards despite the high demand, and it's purely due to the capacity issue. Given the current production capacity, any additional order will extend the lead time for completing the new ships. Currently, the orders in pipeline are scheduled to be completed in the first half and second half of 2027, although they plan to increase the capacity, but now it's still at the initial discussion stage. Yangzijiang see interest from the ship owners looking to place orders for 2028. However, Yangzijiang is being very selective for accepting the new orders. So they give a priority to the better pricing and better margin orders, and currently see ship owners paying more down payment without any issue of collecting the payments. And demands remain robust for the clean energy carriers, particularly for the LEG and LNG carriers. Additionally, there has been increasing inquiries from the containers and oil and gas sector. And there's a slightly decreasing demand for oil tankers and very little demand for bulk carriers. As ship owners are not very sure like how long will the Red Sea tension last, so they are placing orders to buffer against the uncertainty. And in terms of the customer mix for the new orders, the demand are very split. So they say half of the demand coming from Asia and half of them coming from Europe. And the pricing for the new orders remain very stable with only slight increment. And also like they observe fairly stable costs for the raw materials like the steel. And regarding the company's dividend policy, Yangzijiang currently maintains at 30% payout ratio and with no plans to increase the ratio. And there's no major capex for the upcoming quarters. So the 11 billion cash allows the company to continue paying its daily expenditures and also to fulfill the order book to prevent the down cycle of the industry. Yeah, so that's all for me. I'll hand over to Zeng for technical parts.
Thanks, Mel. So first up, looking at S&P 500 last week, the index continued to trade in range between 5,220 to about 5,320 area. So for this week, we are likely to see some further sideways consolidation ahead as we continue to see the index trade in this range. So for now, the immediate resistance is at 5,310 to 5,340 area, or the immediate support could be at 5,220 to 5,265 area. Next slide. So next up for the ETF money for May, we titled it Bullish One Expected Ahead for Oil and Singapore Equities. So first up, looking at the review in terms of their respective performances in May, all the ETFs were in the green. The standout was Bitcoin ETF, which surged about 14%. S&P 500 ETF also did well, rising 5% in May. In terms of the current trends, we see an uptrend for S&P 500, Singapore equities, as well as Hang Seng Index, with the other asset classes being US Treasury bonds, gold, oil, as well as Bitcoin, currently in the range consolidation. And in terms of outlook for June, we expect oil as well as Singapore equities to outperform, to continue our bullish trends. some range consolidation for S&P 500 US Treasury bonds as well as gold, and some slight weakness for Bitcoin as well as Hang Seng Index. Yeah, next slide. So first up, this one is the S&P 500 ETF VOO. So looking in terms of the chart, in May we saw a breakout of the short-term downtrend resistance line in blue, and then this we saw the index actually made a new all-time high. However, this came together with a bearish divergence in the MACD and RSI, which shows that actually bullish momentum is not catching up with the price action. So for June, we could see maybe some continued sideways consolidation first, as the bullish momentum might not be able to sustain going forward. Next slide. The next one is on the Treasury Bond ETF, IEF. So in terms of in May, there was a rebound from the downtrend channel support back to retest the 92.65 previous support and resistance level, and price of just sideways, consolidated sideways over there for a few weeks. So I think in June we are seeing the price action to be relatively flat, to continue some sideways consolidation first at this level. Next slide. The next one is the Gold Mini Shares Trust ETF, GLDM. So in May, there was a rebound from the current bull flag consolidation support highlighted in blue to retest the resistance at about 48.20. Then after that, we saw a pullback in the second half of the month. So currently, with the bullish momentum sort of a bit tapering off on the MACD, we could see some further consolidation first, as the price continues to trade this bullish flag formation in June. Next slide. Then next up is the oil and gas exploration and production ETF, XOP. So in May, the price action was relatively it just consolidated in a very tight range. Still finding some resistance at 152 level, which was a prior resistance back in September to October last year. So it's currently still consolidating in this bullish flag. We think that this ETF could possibly break out of the bullish flag formation in June, as price has not made a lower low since end of April, and could see some breakout with higher lows being formed in May. Next slide. And next one is the Bitcoin ETF BITO. So in May, there was a rebound from the bullish flag support towards the resistance again. In June, we could maybe still see some consolidation or slight pullback in this bullish flag, as the momentum is still rather muted on the MACD. Next slide. And looking at Singapore equities ETF, ES3, bullish momentum has been quite evident after we saw price broke out this ascending triangle. So currently it's trading, price is currently trading outside of this long-term main uptrend channel resistance. And looking at the projected target level for this ascending triangle breakout, which is about $3.47 level, there could still be some upside to come in June for the Singapore equities ETF. So we think that June it could still go to higher levels for Singapore equities. Next slide. And last but not least is the Hang Seng China Enterprises Index ETF. So in terms of in May, there was a price went up higher to actually retest the uptrend channel resistance. So in terms of June, we could see maybe a slight retracement as it continues to trade within this uptrend channel since the bullish reversal in the start of February. Next slide. So next one is on the, I'll be talking about the Thai SDR monthly for May. So we have titled it CPO and Kasikorn Bank to outperform. Looking at their performances in May, most of the SDRs were in the green. The standout was Delta Electronics, which was up about 5%. The biggest loser was Siam Cement, which was down 5%. In terms of their current trends, most are currently in the range consolidation, being Airport of Thailand, CPO, PTT, as well as Delta Electronics. Some of the counters in the downtrend currently are Gulf Energy, Siam Cement, as well as Advanced Info Service. The bright spot for the Thai SDRs, I would say would be Kasikorn Bank, which is currently trading in the uptrend for a few months consecutively. In terms of the outlook for June, we think that for Airports of Thailand and Delta Electronics, it could continue some range consolidation. Some pullback for PTT, Gulf Energy, as well as Advanced Info Service. And CPO and Kasikorn Bank are likely to outperform. And Siam Cement could see a modest price rebound in June as well. Yeah. Next slide. So looking at the chart for Airports of Thailand, currently it was quite choppy in May. It's still consolidating in this bearish flag formation, still finding resistance close to about the 67 baht level, below the downtrend resistance line as well. So in terms of the likely price action to expect in June, I think we could see continue a tight range consolidation between 63 to about 67 baht that area. Next slide. Then for CPO, some better price action recently. Price actually broke out of a downtrend resistance line in May, but continue to be bounded by the bearish flag resistance at about 60 baht level. So it did a retest of the downtrend resistance line breakout towards the end of the month. We could see price do a rebound at the start of this month. Start of this month to actually trade higher with the recent breakout. Next slide. Next, for PTT, in terms of the price action, some weakening price action recently with a lower low being formed, breaking below the support at about 156, 157 baht level. We could see continued weakness in the price for PTT with the this previous support turning to resistance currently, and a lower high and lower low starting to fall. Next slide. And for Gulf Energy Development, quite sideways in May. However, a significant thing to note was that price is still below range consolidation breakdown, below 4140 baht level. So this previous support is still holding out as a resistance. So with that, looks like there's still some weakness, and we could see extension of the downtrend continue in June with that. Next slide. And for Kasikorn Bank, I think it still remains a bright spot. Reason being, price actually, after the breakout of a downtrend channel resistance, it may also manage to break out of a range consolidation as well between 116 to 129 baht. Then towards the end of the month, it did a retest of the breakout. So with that, I think we're expecting, similar to CPO, we're expecting continued bullish momentum to come in for this counter to actually reach higher highs, maybe towards 140 baht and above. Yeah. Next slide. Then for Siam Cement, price action still remains relatively weak. It continues to form lower highs and lower lows, with a breakdown of about 245 baht in May to actually retest the downtrend channel support. So that we could see maybe some modest rebound from this support. However, it's likely to be quite weak given the strong prevailing downtrend discounted since last year. Next slide. The next one is on Advanced Info Service. So for this, still continuing to pull back in the handle of this current handle formation. Also, the 210 previous support has 210 baht previous support level has continued acting as a resistance. So with that, we could still see maybe some slight pullback ahead as it continues to pull back in the coming month. Next slide. And last but not least, for Delta Electronics, price action starting to turn a little bit better. Although it's trading in this downtrend channel, we haven't seen a lower low since. In fact, we've had a higher low at about the 63 baht level. So with that, I think, however, we are still seeing lower highs generally. So with that, we could most likely outcome is that we see some sort of range consolidation in June going ahead. Yeah, next slide. So for NVIDIA counters, first one is a technical buy for Broadcom at $1,412.45. Take profit level at 1,660. Stop loss at 1,330. The last close was $1,328.55 on Friday. So this trade actually hit our stop loss. The original trade idea was that Broadcom was actually consolidating in this range consolidation between 1,200 to 1,430, with a recent bull flag being formed at 1,380 to 1,430 near the resistance area. Also, the 1,380 level was a prior resistance, now holding out as a support prior to the breakout. So with that, with the increasing momentum, there was a possible chance that price could trade higher to break out the consolidation. Next slide. The next one is a technical buy for CapitaLand investment at $2.66. Take profits at $2.90 as well as $3. Stop loss at $2.55. The stock last close at $2.66 on Friday. So with the chart for CLI is actually looking better recently after breaking out of a downtrend resistance line. Price also managed to break off a bullish inverse head and shoulders pattern with the neckline at 265, holding out as a support when price did a retest. With the bullish divergence and increasing momentum on that MACD and RSI, we could see an extension of this bullish reversal taking place to hit these two levels going ahead. Yeah. Next slide. So this is just a summary of the two trades initiated. First one for Broadcom hit our stop loss, so it's down about 5.8%. As for capital investment, it's currently flat. Yeah, so that's all from me. I'll hand over time to Paul to talk about Valuetronics results. Thanks.
Yeah, thanks. If you go back to the back page again, so Valuetronics released their second half 24 results. As the title suggests, what we're trying to say is that you're getting like 6% plus dividend yield as their customer base is being refreshed. Next slide. So for Valuetronics, the revenue was below estimates. You notice the revenue is down 19%, but PATMI was above, partly because of their strong interest income, and also although revenue was down, their gross margins was generally flat or down 3%. It was below our expectations. I think we thought that the new customer base could actually push up the revenue this half, but I think this is going to be pushed forward to FY25. So the positive was this higher gross margin. So even though revenue was down, the new products gives a much higher gross margins. The second thing was that the positive was there was a robust free cash flow. So their cash flow is roughly about 36 million a year for last year, and they are paying out almost 18 million. So even though they are paying, probably including the special, about 6% yield, combined they rose it by 25%, they still have like 200 million of cash left. I think the market cap now is probably like 240 million. So yeah, so 80% of it is still in cash. The negative was the decline in revenue. So what is happening is that as they are refreshing their ICE, so this is industrial products. So there was two products which was quite material to them and is slowly coming off. Was a one particular consumer electronics. I think it's electronic toothbrush, and the other one was auto parts. So it's some of the connectivity modules. I mean, they weren't really exact on it, but what has happened was that because of for the consumer products, the customer shifted out from China, and then they moved the whole supply chain to Indonesia. So they got affected because they don't have anything in Indonesia. Then for the auto part, it shifted out from China and then moved to the US. So again, they were affected. So this is all flushing out, and then as the new products come in, so that's why you have this weakness in revenue. We expect most of it to be out by FY25. So in terms of outlook, no change in our view. I think we raised our target price mainly because we roll over our earnings. So we use like 11 times FY24 PE. Now that FY25, so we roll over, and then the PE is high. The PEs of the valuations because the profit is higher, so that's why the target price is also higher. So we still like it. I think a bit disappointing that the recovery didn't happen as strongly this year. Although net profit is still up about 20%, but mainly from their interest income. You notice the interest income here is up 87,000. So they still have a net cash 200. They're still aggressively trying to return. we still think that they're going to grow the dividends, and they're aggressively returning capital, partly because they still have like about 70 million Hong Kong dollars to share to buy back, which is roughly, if you take a current price, I think if you look at a report, it's probably about 40 million shares that they're still looking to buy back. I mean, of course we asked why you didn't buy back. I mean, mainly because if the volume isn't high, they cannot go in and buy too much, so that's why they will see them sporadically come in. Then of course, what signals then is a bit of a vicious loop, right? Because you don't buy back, then the volume not be high. But the reason why they only come in to buy when they see there's particular news, then there's a bit more liquidity, then they'll go in and buy back the shares. Anyway, excluding cash, the share price probably like 3 times EV EBITDA, about only less than 2 times. Yeah. Next slide. We move on to the Singapore Weekly. Not much news on Singapore. For China, the PMI is still weak, so the weakest in 3 months. So most of the data points coming out from China is still quite sluggish. I think last week we talked about retail spending, then we talked about manufacturing is weak, and then property is also weak. So most of the data points from China are still soft. Exports is still resilient out of Korea. In the US, we have this core PCE, which is the core PCE inflation, which I guess the Fed has a target of 2%. It's still the lowest in 37 months, but we still hold the view, I think we'll discuss later, of only 1 rate cut this year. Another sign that US consumer is turning weaker. So auto sales in the US is down 3%. I think this is the first decline in close to 2 years. So this is another indicator. I think there's probably the US going through a soft patch right now. Next slide. So in terms of our tactical views, although the PCE inflation is within expectations, we still see inflation pressures creeping up everywhere. So I think for the month of May, the hot sector was not actually AI for once. The hot sector was actually container. So container freight rates actually jumped 60% in May, and it tripled year on year. So you should expect all this to flow into inflation numbers. And then we also have like commodity prices all coming up, especially metals. So what we do see is we see inflation everywhere. So we think even though the current rate, it was all over the headlines that inflation is within expectations, but we are quite worried for 2 things, because there's a lot of commodity and cost pressures, and secondly, the base effect we'll show you later. But anyway, the market is pricing in 1.5 hikes. We think 1 cut in December, because we think, like I highlighted before, September and November probably too political to cut, because September is campaigning, then November's election. But the one country or one area region that's going to cut is in Europe. So the market is pricing in a 96% probability of a June cut. This is almost a done deal. There's going to be a June cut. The meeting, you look at the bottoms, on the 6th of June. One of the reasons is because inflation in Europe has sharply decelerated. Remember when the war broke up, the gas prices spiked up and so forth. So inflation peaked at almost 11%. Then now it's 2.6%. I think it's lower than the US. But then the last time inflation was this low, actually the ECB had negative interest rates. Now it's about 4%. Of course, why are we talking about Europe? Man, nothing to do with us, but mainly because we got a buy call on Cromwell, and then another REIT that is in Europe is iREIT Global. Coincidentally, they're going to do a proper insights webinar with us next week. So you feel free to dial in if you have the time. Some of the events to watch for this week would be, the key ones, the US payrolls on Friday. Anything below this 185,000, I think the market could probably rally, because they think the rate cuts will happen more likely this year. And of course, there'll be NEO results, Meituan. I mean, we don't cover all this, but just for info. Corporate insights, of course, we have iREIT. We also have Singtel coming. Also, it's probably one of the largest ones that are presenting. If you have time, feel free to dial in. And then we also have all tech. I mean, because today they announced one very big contract award. This one, the share price went up. Next slide. Okay, this one is just to show you interest rate expectations. The blue line is December, so of course the market got risks got sold off because inflation expectations now move up. April to me not really much change, but in general you're looking at maybe 1.5 cuts. So These are the expectations, of course, zero in second quarter, but third quarter is a bit of a 50-50. Most likely may not cut in the third quarter. Most likely cut, the market is pricing in, at least the futures market is pricing in one cut, at least in the fourth quarter. The one on the left, so this is the red line is what is the inflation the Fed monitors. Their target is the green line at the bottom, the 2%. The shaded area is the trend line. So this is again mathematical. So we think inflation because of the base effect. So what I mean by base effect is that second half of last year, a month-on-month movement was like 0.1, 0.1, but this time now it's trending at 0.2, 0.3. So it's very unlikely that the inflation is going to trend down lower. Most likely scenario is the inflation could actually trend back up from June, July, if you just extrapolate the current month-on-month movements. Again, it's mathematical, and also with all the inflationary pressures coming up from commodities, freight rates, all that, so we worry that inflation could actually pop back up again. Next slide. Okay, the one on the left is just to show you the blue line is commodity prices. That commodity prices has a big influence, of course, on inflation. With a lag effect, you notice the blue line spiked up a lot, but then only a few months later, you see inflation moving. So a commodity price rise will impact inflation, but it'll take some time, probably a few months, then you see it in the inflation. So that is what worries us. The hot sector was container rate. So this one is the rate from Shanghai to LA up 60%. We thought it will only affect Europe, because it's all because of the Red Sea. But now it kind of, because it was actually coming down, but then in May it just spiked up again by 60%. So all this is going to flow down to inflation, especially goods inflation. Next slide. So this is just for illustration to understand why the ECB is cutting. So inflation in rate hit across 10%. It really collapsed a lot to around 2.6 now. And if you look, the last time was this level, around this level in 2019. Inflation in Europe was actually negative. Sorry, the interest rate was negative, the ECB deposit rate. So the expectation is the cut. I think market is not 50-50 whether they'll do a subsequent cut in July, but I think some of the ECB officials is guiding another rate cut after that. Next slide. Okay, this is our model portfolio. Every month end, we'll come up with our usual Singapore monthly by tomorrow. Just I haven't done it, finished it yet. But anyway, it was a bit of mixed results. So the one that dragged us was Chinese Aviation, but we're not too worried about Chinese Aviation. I think the earnings will be spectacular, I think, in the first half. But I think without any news flow, these stocks kind of drift down. Comfort was down also, the other stock. The one that went up was banks, ST Engineering, and Value, and so forth. Yeah. Next slide. This is just a glimpse of the sector. So the big sector that moved was under shipping, was essentially Yangzijiang Shipping, because inside there is also Seatrium. The one that holds up the index is, of course, the finance sector, the banks up 2.2. So the top gainer, the one on the top is just some of the small mid caps, large cap, everyone. I mean, we don't cover every single stock, but just to give you a glimpse of what did well. Of course, Yoma did well. The tech stocks got hit. I mean, AEM, UMS, all that. Yeah. The one that did well for the index, at least, was Yangzijiang, up the 29%. So actually, Yangzijiang is just moving along with all the container ships. So if you look at Maersk, Hapag-Lloyd, they're all up almost. I think Maersk is up 40% the last 2 months, or 20% in May. So Yangzijiang is just moving in line with all the container shipping because of all the freight rates rise. All this just for your reference. Yeah. Next slide. Again, this is just for reference that what did well in May, the asset class. Again, the US continues to do well. It's up. The Nasdaq rebounded very strongly, 7%. All the interest rate sensitive stocks like REITs, bonds are the underperformers for this year. I mean, REITs are down like 14%. Yeah. I'm not sure which one got the slowdown the most, but anyway, this is just for reference. The orange line is May, and then the blue line is year to date. Next slide. Then the final one, we just look at some of the Asian equity markets. This local currency, not adjusted for US dollar, but just to give you a sense of who's doing well. So again, just for reference. So Vietnam went up. I have no idea why it went up. But in terms of the market, I think Singapore banks performed well. I mean, if you look at the bottom, a lot. India was down. Shanghai was down. Philippines and Indonesia was the worst performance. This local currency. Again, just purely for your reference. Next slide. Okay, just one last time for me, just Yoma. So we do non-rated, we just hardly do it, but because not many people write on it, so we just do it for them. Yeah. So the financials was up. I think revenue almost doubled, 80%, but the EBITDA jumped about 106. The EBITDA, I mean, almost tripled or 2.5 times. And then the profit mainly all came from the property, Yoma Land. You can notice at the bottom here, Yoma Land profit up almost 10 times. So the growth was driven by property and wave money. So for property, yeah, just to dial back a bit. So Yoma is mainly a property developer, fintech, and F&B in Myanmar. Fintech means they have this app whereby if you want to transfer money OTC, that means let's say you have a relative in the rural areas, I'm not sure who has, but anyway, they want to transfer from the city, you just send it to one of the dealers, one of the authorized dealers there, and they will give money to maybe someone's relative in the rural areas, just to give you a sense. So property was the main highlight. It was up tenfold to 23 million. But for us, I think the currency is the challenge. So if you notice on the left here, there was this thing called Yoma Land Services. So there's a bit of an accounting anomaly. So even though the Myanmar chat depreciated, they recognize a 45 million gain on Forex because this is a bit technical here, but the subsidiary is in reports in the local currency. And because the US dollar valuation was flat, but the currency depreciated, so they got this big 45 million jump. Yeah. But currency does hurt them because translation losses did drag their book value, if you look closely, by almost 90 million. So in terms of the outlook, we still think 2025 will be a growth year. They got a huge order book of 150 million of property that they sold, but not recognized yet at the revenue because it's 1.5 years. And they're probably going to sell another 40 million of property. So their revenue run rate is about 50 million. So they're probably going to sell. So property is doing well. So why is property doing well? Mainly because they started to move more to affordable units. And the second reason is because it's a probably interesting phenomenon. I mean, if you're in a country with a lot of inflation, so Myanmar is facing very high inflation. So a lot of the public or consumers, households don't want to put money in cash because inflation, right? Unless interest rate is very high, but if not, the value of your cash is going to drop. So a lot of them put into real assets such as property. I think this is what you saw in Turkey too when we spoke to our Turkey counterparts. Then because there's no stock market there, so the only place to store money is in property. Then F&B recovery, because in Myanmar they actually have KFC and YKKO, a local noodle chain. So what happened was that in 2020 last year, because in Myanmar you can get like power cut of maybe 4 hours in a single day. So you can't run a restaurant with that like that. So they actually have diesel generators to provide. And in late last year, there was a bit of diesel shortage and the price spiked up. So that's why the margins, if you look at the left here, was affected, the F&B. You can't really see the number here, but their F&B was actually down 60%. But right now, that has normalized, so you should expect better. Wave money, this is a bit more nuanced. Not many will know this, but I think they are growing more on the digital payment. So something interesting for this fintech, they don't really will make money from payments. So it's like us using our, I don't know, DBS app or PayLah to pay. They won't make money from the PayLah transaction, but they make money from the float. Because all of us probably keep some wallet, some money in PayLah, and then they will make money because they're not going to give us interest on that PayLah. That's the revenue model for Wave Money. So long as you're pervasive, people use your app, then you keep a lot of float. Yeah. The stock is 62% discount to book, just for your reference. Okay, I think that's it for me. Thanks, everyone. Can move on to Q&A.
Thanks, Paul. Yeah, so let me try and take some questions here on. The first is, what's the timeline for NVIDIA target? So typically our high prices are at least 12 months from when we issue it, so 12 months from now. The next question here is, NVIDIA key guidance by 9%. Why do you increase your TP by 44% from 970 to 1400, even as you mentioned last time, Black Pearl revenue was already built into your TP? Yeah, so essentially, the reason why is because it's mainly mathematical, I guess. initially we underestimated the supply ramp that they could gain. So when you just increase, by instead of thinking they ramp maybe 1 to 2 billion a quarter, you go 4 billion a quarter. And we also expect this to last longer than previously anticipated because of the surge in demand and where the demand is coming from. That naturally just increases the revenue expectations for this year as well as for next year. In terms of our margins, we kept it unchanged. So it's really just a increase in just demand and on the revenue line. That's really what was pushing the target price up significantly. Yeah, there's another question here. What is your assessment of NVIDIA in view of US control of export to China through other countries, especially via the Middle East? What's the impact in revenue? Yeah, so essentially, don't really think there's that much impact on revenue, at least according to NVIDIA. And this is likely because they already have, when it comes to China especially, they already kind of factor this into their revenue model, and we already don't expect much revenue coming from China. So we don't think that there'll be any more significant impact, or rather the impact is overshadowed quite significantly from other sources of demand, and that's coming from increasingly from your enterprises, from your hyperscalers, as well as a lot of other sovereign nations. So even on the call, they did mention countries like Japan and India. They are spending quite a lot of money, or starting to spend a lot of money on developing their own AI infrastructure, and a large portion of that will flow into NVIDIA compared to maybe some of its other competitors. Yeah, so hopefully that helps to in short, really not that much impact from export controls or anything in the Middle East. Yeah. I think that's all the questions for NVIDIA. Maybe I'll hand it back to the rest of my colleagues for the rest. Thank you.
Yeah, thanks, John. I'll take that one about the JP Morgan, and also hold on, let me try to find it. Yeah, anyway, it's asking, will the impending rate cuts have a negative the impending rate cuts in third quarter and fourth quarter will have a negative impact on the NIM of JP Morgan? Yeah, so if you see their current guidance, it's below what they actually their current guidance of their net interest income. So they give guidance on net interest income. We look at that instead, because that reflects the net interest margins as well. So in the third quarter, it will have a negative impact. But what's happening now is that they have actually increased their net interest income guidance, and we also do expect it to actually come in higher than what they have guided for. And this is mainly due to the rate cuts, the expectation of rate cuts to be fewer than it was maybe at the start of the year. Hence, we will see probably a slight uptick in their net interest income. But if you're talking about the previous years, yes, they will definitely have they'll dip compared to the 2023 and even 2022. Yeah. Hope that answers the question. Hand it over to the rest of my colleagues. Thanks.
Hi, so this morning you mentioned your interview over the radio podcast that there has been a huge selling of the US market in May, which would stretch into June. Can you share the source of this institutional selling news, and you or any of the team member can comment on how the selling will have impact going forward? Yeah, so sorry, we can't disclose the source, but it's rather normal for capital to flow in and out of the market. Yeah, since currently there's no major event to stimulate the market, and it actually doesn't really matter much since the market actually increased by 5-ish% in May anyway. So yeah, we expect a relatively muted market in June. By muted, we mean it's just not as much as event as the earnings period. Yeah, and once earnings started, capital will flow in and out naturally depending on their forecast. Hope it answers your question. And there's a question on sets. Tim, comments on sets in the words already over for this country and its outlook given the seaport congestion. Yeah, for sets, we believe their recovery and the integration with WFS is well on track. So for the air service, it has already recovered back to 80% of the pre-COVID level. And they expect a full recovery by the end of this year. Yeah, so their revenue still have some room to grow, yeah, for this year. And the increase in shipping costs and container costs do benefit them in a certain degree. Yeah, as the shipping time is prolonged. So for the time sensitive and the temperature sensitive products, so they tend to turn to the air transportation. Yeah, and the cargo business is doing well. They are also benefited from the surging e-commerce demand in the Europe. And they are also partnering with the very big Chinese logistic companies, partners, like the Cainiao Logistic, yeah, to cover their European e-commerce business. Yeah, hope it answers your question. I'll hand it over to the rest of my colleagues. Thank you.
Yeah, thanks. So let me just answer. What is PLTR? So I'm not sure. Not sure what's PLTR. Sorry. How would the en bloc sale of Delphi Orchard impact CDL, especially specifically and the REITs generally? So Darren covers CDL. He's not here. He's on leave. But essentially, this is part of the scheme. This is part of the URA scheme. So just slip my mind. What's the name of the URA scheme? The URA Strategic Development Incentive. So they are doing this something similar to their central project, where they if you buy a sufficient size, I've forgotten the exact data plans, but essentially, if you can redevelop an old site and show the URA that you're developing something. I think the keyword here is something unique. I mean, then I think the URA will give you higher GFA. So basically, additional free space for you to sell or develop. And they will give you increase the height also. So they're doing it for Central. So this is probably the plan that they're doing for Delphi Orchard. Of course, the issue here is that CCR high-end projects, with foreigners, with the 60% ABSD, I'm not sure how able are you going to sell for residential. I think CDL obviously knows this, so I'm not sure what they're going to develop. Maybe they're going to push some office development, increase more office and add another hotel. I really no idea what is the plan. But with this, you can raise the plot ratio, and then you can most of them go into a mixed development project. How this affects the REITs generally, it might take out some supply in the near term, maybe some retail space in the near term, but then in the medium term, this will add in new supply. But all this is quite marginal. I think it's very modest change in demand supply. Because they probably do something with Orchard Tower, the whole integrated development that they own in that whole area. Yeah, sorry, I struggle to answer, but that is because I don't really cover the stock, but that's definitely what their plan is. I mean, like what they did for the Orchard Central Mall, Central Square. Yeah. Let me just run through the. Do you have an updated view on Alltech? So, I think the outlook for Alltech is still pretty strong. What is happening is that there's a big capex cycle still. I think biodiesel is still happening, especially in Malaysia. Malaysia only B10, Indonesia's B35. And they are pushing, and in Indonesia, if you want to go B40 and higher, you need another fuel type, which they are benefiting. And there's also capex coming up outside in the overseas market too. So there's a few capex cycle drivers for Alltech. The big one for them, I understand, is sustainable aviation fuel. So that one can be really big, because one sustainable aviation fuel project is probably, I don't know, 500 to 800 million US. normally done by oil and gas company. They won't build that, but you probably need feedstock. So you need feedstock, and one possible scenario is they collect all the feedstock from all the palm oil. So sustainable aviation fuel is basically used cooking oil. And then you blend in. I think SIA wants to have a 1% blend. So that means every plane you have, there's 1% cooking oil. Hopefully it's safe anyway. Yeah, but that's the plan. And then there's going to be a big rollout. Almost every airport will need one. So they probably could ride on that cycle too. Yeah. Okay, sorry, there's quite a lot here. Let me try my best to answer. Hi, Paul and team. The local news reported port congestion in Singapore. Any views on how this may affect companies like Samudera and Indonesia? Yeah. So this will probably benefit Samudera in terms of port congestion. So in generally speaking, when the port is congested, it means that all these container ships will be parking. So instead of moving around, they are parking there. So a lot of supply or inventory or ships are being used up. So it actually will bring down the supply of container ships. It won't really move much for UniAsia because UniAsia is dry bulk. So UniAsia normally carries bulk ships. But again, if it's again, if all these are congested, then there could be some benefit, like all ports, because once congestion happens, means supply is, rather than sailing, all these ships are parking. So obviously supply is curtailed. So in general, they could benefit. But again, how long all this congestion, we really not sure. The last time when I was in the Westport call, they said that the congestion is not very long, it's just very intermittent. Because one thing has happened is that although the ships have to sail around Africa, you just need a period of adjustment because there's still a lot of ships. There's still a lot of supply in there. So generally what it means that you need more vessels out there because the sailing times has lengthened. But according to them, I think their view is that there's a lot of supply to cope with this. So, all these ships could have been sailing faster routes. That means they could unload the goods and then go back on, but they got to sail around the Cape. So, but in general, there could be enough supply. I mean, that's the view. Yeah. But again, the freight rates are up 60%. So probably that's not the right view. Will we see rally before UK and US elections? I'm not sure. That one, I'm probably going to leave it to Zain. I mean, historically, whether there is. I think probably more cautiousness. UK, I think, is almost a done deal who's going to win. So I don't think there's much change. And the economic policies if the Conservatives, the Labour Party wins, then I think they probably going to continue with the current policies. For the US election, I think as we hit into US election, you're probably more cautious because if Trump comes in, then you could see a whole drastic type of policies coming in. Like, I mean, if he comes in, then the whole renewable sector is going to get sold down. So, I mean, if you own renewable stocks, you also be cautious whether to buy, because immediately if Trump wins, then all the renewable stocks just going to slow down because I don't think he's a big fan of renewables. Yeah, so I think more cautiousness rather than anything. I don't think there'll be a rally because you're taking a big risk. Yeah. What is your forecast for inflation? When will the Fed cut rates? Our forecast. We don't have an official Fed, since we don't have an economist. I'm the part-time one here, so probably not very good one. So we don't have an official inflation, but if you look at the trend line, we think inflation could actually, the core inflation, you look at the chart earlier, could actually climb back up. We think there'll be one rate cut only in December, because we don't think September it's too political. I know you cut, then Trump was just going to complain, see the Federal Reserve cut just before election. Then you cut in November, then they also complain, or see he didn't want to cut and support Biden. Wait only this November and cut. So you cannot win. So yeah. Okay. Sorry, there's so many here. Okay. So we still think December is the most possible way to cut. I mean, it probably gives room for the Federal Reserve to cut and not sound to be taking any sides in the elections. Your comments on Balsted, because your team produces shared promising outlook on construction. Construction activity is still very promising. I think we spoke to one contractor, so it's still very robust, the demand. But what they worry of is just competition. So I don't have any update on Balsted. They don't really meet investors. Paul, any views on Alishan earnings result and its outlook for next 1 year? Yeah, I think we presented on Alishan last week, so we are still positive on Alishan, mainly because of the Collie Wu. So the 2025 will be stronger because you get they get additional visibility about, I think, 800 keys, and there's also the other one more thing is that they're going to sell the food factory, so you're going to get this property development bump in earnings. The only thing is that don't expect rates to rise. So we think because of the shortage of housing, not say shortage, because the rental housing, private residential housing went up, the index went up 50%. But this thing is flattening out. So they're not expecting rates to rise because they think rates is going to flatten out. Yeah. So the outlook is still healthy. Yeah. With Paddy's departure, anyone covering PenU? Yeah, the person speaking right now is going to cover PenU, but don't worry. I think I looked at PenU for, I think, more than 10 years. So we still like PenU. I think it's like I said, I know they got 40% market share in ready-mix concrete, and regardless, you still have to buy from them. Yeah, and the development is still strong, especially T5. So T5 is going to be bidded out. So you're going to hear some maybe news flow of T5 contracts awarded in the second half. Any idea why the big sell-off in CDL last Friday? Comments on outlook. Okay, so the property development, property transactions. So I'm just going to apologies for a minute. Let me look at the latest data. But property transactions is actually still pretty weak. I think they are down about 11% year to date, property transactions. So I think sentiment for property developers, I think apart from Gorko Land, I mean, Gorko Land seems to sell up most of their projects, but apart from Gorko Land, I think property is going to be a bit, is going to be very cautious. I think year to date, sorry, up to April, sorry, give me 1 minute. Just let me double check the data. Don't give you the wrong number. So year to date, property launches excluding EC is down about 33%. Including EC is probably down about 20%. So property development has been pretty tough, and I think the big overhang for city development is going to be their big project. Again, this my the big project they've kind of delayed. The former Fuji Xerox Tower project. So like we mentioned, there sorry to keep saying this, but there is no foreign demand. So with the 60% stamp duty, even though if you think the property market will rise 10%, which is the limit of the authorities, you take you 6 years just to break even, just to cover back your ABSD that you pay for 60%. So there is no foreign demand. So we're just a bit worried of those property launches in the CCR, the call center region, because without foreign demand, I'm not sure who's going to buy this. I don't know, 3,000 or plus per square feet. Thanks for your. Can you share on the financial with regards to the recent EGM? Yeah, apologies on this. I don't really have any strong views on financial holdings. I didn't get to listen into the results briefing. But our general view, if there isn't any change, is it's hard to make a strong case for Yangzijiang Financial Holdings. Although it's trading below book, but the China banks also trading below book. And the second reason is that so Yangzijiang Financial Holdings, most of their earnings was from loans in China. So they're transferring that out to do private equity here. And sorry to repeat this again, but private equity, you pay it 2 years before you get a return. And that if you can get a carry that's provided, you have to invest. Then after 2 years, you have to wait for the return, and provided you invested well, then you get a return. So this stock you have to call back in 2 years' time. Yeah. So of course they got a lot of cash, and then they're probably returning some of this capital. But I'm talking about business-wise, it's going to be a challenge. Yeah, because they are trying to start a private equity franchise here. I think in the meantime, you like private equity, and then just go buy Blackstone or buy some China banks. You probably can replicate Yangzijiang Financial's operational performance. Yeah. Hi, Paul. Any container-related stocks worth watching? Your view on Costco? Okay, Costco no longer in container. I think they used to be. You remember they bought this company called Cogen. So now Costco is more into container depot. That means they are warehousing rather than container shipping. The only ones here for container shipping Of course, Yangzijiang, because half their order book now from container ships. The other one is Samudra Shipping. Yeah, Samudra Shipping is more Asia-related trading. We'll try to bring them in for a webinar. Try our best. Hi, you mentioned there's only one rate cut in the US. What would be the outlook for impact on S-REITs? Would you see any recovery on S-REITs on the horizon? Is it time? Okay, my general view, for why as well, I don't cover REITs. Okay, for my general view is that I think everybody knows the impact. So that is already priced into REITs. And if you think about it, most of the REITs didn't grow the DPU because everybody have to reprice their loan book to higher interest rates. So that's why their interest expense can rise 20-30%. But again, this is going to be the third year of interest rate headwinds. And if you know in 2022, so this is the 2023, 2022. So most of them hitched their book about 3 years. So you could argue that 2024 is probably the last year, or almost close to the last year, where most of the REITs will face these interest rate headwinds. That means DPU contracting. So this could be the last year. Then next year, where the rents start to catch up, and then they can grow their DPU organically. And if you do get one rate cut, so probably that I wouldn't say. I mean, my own view is you can accumulate, but just do it very gradually. Yeah, because we think a lot of already pricing. Everybody knows the REITs are hurt by the DPU contracting because of interest rates, and most of the hedging that they did is already flushed out. That means most of the loans are already repriced to higher interest rates. So the thing is just to wait whether there's a rate cut and so forth. We still think there is going to be one by December. So I think it's worth accumulating. But for us, we are pushing more like Cromwell and so forth, or even there are still some local REITs that are paying about 8-9%. Yeah. High power interest rate affect stock market or already factored in? I think the sentiment, if the employment data is lighter, I think there could be some short-term upside into it. So I don't think it's going to be totally factored in. Although everyone is pricing 1.5 cuts, but the confidence level may not be there. So I think any rate cut will definitely benefit the stock market. Yeah, but we don't. Yeah, but we still think inflation is going to go up. Yeah. Any study on Amazon? Helena, I think Helena will answer that. Hi, team, what is your method for analyzing stock? Okay, which one is more reliable and better method for analyzing stock, top down or bottom up? It really depends on the industry. So we just give you the example of container rates. So if container rates ran up, it doesn't matter whether the stock doing well bottoms up or not. The whole sector will just go up. So certain stocks like commodity names, if you're talking like I don't know, coal sector, oil and gas, it doesn't really matter bottoms up. It's all about the cycle. So if there's a strong commodity cycle, all these stocks will go up. Bottom up is so, but for us we do a lot more bottoms up than top down. So certain stocks like Capital Corp, they do well from bottoms up because they had a lot of assets to dispose and so forth. So it really depends on the sector and the stock. Like LHN, probably is bottoms up because they're starting this new product, which is a co-living, so that drove all their earnings. So it really depends. So some companies, they got a new product, then it's totally bottoms up because regardless of the macro environment, they will still do well. Yeah. So like Valuetronics, sorry to mention this name again, probably everyone's sick of it, but it's purely bottoms up. Although the macro environment not strong, but because they got new customers and they got very strong balance sheet, so that's bottoms up. So it really depends. But for commodity stocks, it's just all top down. I don't have to go and think, so how do I go and do balance sheet? I just look at if oil and gas, if the oil price move up, you don't have to worry what's going on in Seatrium, the share price just go up. What's your outlook on Wilmar? So I think I get a Wilmar question every week, but what's your outlook on Wilmar? Does profits rise when CPO price rise? Seems like a lot of selling pressure with the volume. Yeah, any views? Yeah, so thanks for the question. Again, we are not positive. I think we're not positive on Wilmar because the two things that so this is really a top down kind of like the earlier attendee asked. because the environment isn't strong. Chinese consumer is not strong for them. Palm oil price is high, but it's not moving anyway. But yeah, and also their hog prices, basically pork prices in China not rising. So all these are not helping their earnings. Because they rely on these three buckets. They really rely on China edible oil, China soybean crushing, which is dependent on pork prices, and then or hog prices, sorry. And the third thing on palm oil price, and also palm oil refining. But that is the margins are hit because when palm oil price went up, there was a lot of refining capacity in Indonesia. But they do rise like any. But if palm oil price, the best way to play is just buy Golden Agri because they are pure plantation. So Wilmar benefit, but not as much as the pure plantation companies. Yeah, I'm not sure about the volume. Sorry, I didn't really see. Oh, Palantir. So Palantir, I'm not sure. I'm probably going to have to ask the US team, other Umbridge. Yeah, thanks for that. Sorry, I didn't know what's PLTR. Yeah. So I think that one have to ask Umbridge and Jonathan on that. Let me answer this last one and I hand over to the team. Hi Paul, you mentioned mathematically there will be an increased chance of inflation going forward. How do you likelihood that you mentioned? Oh, okay. So what we do is a month-on-month. So month-on-month on a 3-month basis, inflation in the US is trending about 0.2, 0.3%. So if you just extrapolate it, you could see it jumping back up in the second half. So that's what we mean by mathematical. Sorry, I wasn't very descriptive on it. Yeah. So last year they used to have some months of 0.1 month-on-month improvement. But right now it's going to 0.2, 0.3. So but we don't know. The only thing that could help them is really unless rent suddenly spike. But that one's a bit of a black box. Most people still can't figure out where rent is going. Yeah. Hope that helps. I hand over to the rest. Yeah.
I guess I'll take the Amazon question. Sorry, Mia. So Amazon actually released their earnings last month. Pretty strong earnings overall. Is continued strength especially in their AWS and advertising. So their AWS show more signs of reaccelerating. It's on the top end of the company's guidance. Most of the outperformance was driven by customers migrating their workload from on-premise to cloud. Their generative AI service is also seeing a pretty strong demand signal. Their management has also disclosed a significant increase in the app capex for 2024 in order to boost their AWS growth. So that kind of indicate the company's confidence in their AWS expansion. In terms of their retail sector, there's a pretty good improvement in their margins because they're continue reaping the benefit of regionalizing its operation and has shown progress in bringing the cost down structure. So the new things they're working on is they're consolidating units into fewer boxes in order to lower down the cost. So their first quarter operating income was at an all-time high, which beat the company's guidance. Their operating margin also stood at 10.7%, which is reaching the double digit for the first time. So overall, it's pretty strong. But one negative point is the company kind of hinted there's a slowdown in consumer spending. So they start realizing that consumers are being cautious about their expenditures. So they're seeking for bargains and opting for lower price alternative. So this trend appears to persist in the second quarter, especially in the Europe market. So they have guided down a revenue growth that's a little bit lower, around 7 to 11%. I think overall, it's still pretty strong over on the growth. So we maintain our buy recommendation. Our target price is around $220. So I hope that answers your question. I'll pass my time to Miao to answer the question.
Yeah, thank you, Helena. I'll take the ARA US Hospitality one. What's your view on ARA US Hospitality Trust? As news reported that Tang's Group is taking over the manager. Yeah, the effect is still very early to be realized, and essentially just transfer of ownership. And but it's very much in line with the streamlining program undertaken by ESR. And yeah, we believe there's like more moves are expected from ESR, like for their streamlining program. Yeah, hope it answers your question. I'll hand over to the rest of my colleagues. Thank you.
Thank you, Meow. So we'll take the question on Palantir. What is your assessment of Palantir? Thanks. So I don't cover the stock, but I mean, we'll try my best to comment on it. So Palantir, it basically is a data analytics company, and its main customers are governments and enterprises. So 50% of its revenue comes from government as well. The rest comes from the enterprises. So in the most recent quarter, its revenue, it grew by about 21% year over year to 634 million US dollars. And in terms of its profitability, its operating margin, it's also expanded from like 24% to 36% this year. And so as a result, this is resulting in its net profit expansion. Like it reported its sixth profitable net quarter. So and also we believe that the company it should benefit from like the increasing number of contracts it has been receiving from governments, as well as the growing demand for decisions that are made through data analytics softwares. So the company could benefit from that. So hope that helps. Would now to like to pass it on to the rest of the team.
Oh, okay, let me just answer these three. There's four. Okay. Any updates on micromechanics? Is the operating conditions getting better? Share price inching up? I don't really see anything improving for them, because micromechanics is very dependent on the back end of the semiconductor cycle. So for those who do not know, the front end basically means the wafer. That means that round like frisbee looking cylinder thing. Then the back end is when you need to package the chip. So front end is where most of the profits applied and all that, and most so they haven't really got like AEM, UMS and Franken is. So we don't see really strong volumes for the back end. So that's why we don't really I mean, it's definitely recovering from last year after such a horrible thing, but we don't see any strong recovery for them. They are still trying to enter the front end, but not so sure how much headway they've gone in. So I'm a bit more cautious. I mean, for me, if I were to buy semicon, I'd rather just use the three guys, AEM, UMS, rather than micromechanics. Yeah, because I don't really see them getting ahead, or even Grand Venture Tech. I mean, they are probably far ahead more than micromechanics on the front end. I think Grand Venture got like four customers on the front end. I'm not so sure how many micromechanics has. CDL debt levels are concerned. So their gearing is around 1 time. This is based on a book value of $10. But do note that they so their debts. I just want to get this right again. So apologies. Let me just double check. So they have about 8 billion of net debt. So gearing, net debt gearing probably like they have about net debt of 8 billion. But their assets is not just the 10 billion. Their assets, the total equity net assets, because their RNAV is about $17. So the actual gearing, if you take into account the fair value of their assets, is probably about 0.6, 0.7. So I'm not terribly worried. But and they generate EBIT profit about 800 million, and they pay interest about 400. Yeah, of course, not a nice thing. Like half of profit go into paying interest. Yeah, but I don't think they're in any so-called distress level, especially if you have if the bulk of their assets is in Singapore. So in Singapore, asset values have held up very well. Of course, if their assets are in I don't know, in the US office, then there's a bit more troubling. So the assets are Singapore, so there's a lot of liquidity and so forth. So that's why not such a concern. Yeah. Is there any MAS statutory debt limit for CDL to stay below? No. So this is a property developer. I think like all their covenants is all negotiated with the banks themselves, rather than regulated. But I think the banks have some property development exposure limit itself. Yeah. Please comment on AEM, UMS, and Franken fundamentally. Thanks. So if and also your list of preference. So my preference is probably Franken. Because they are very widespread customer base. Then because they have a widespread, and they also have medical, so it's a bit more diverse rather than UMS very concentrated on 2 customers. And my worry for UMS is just that they might be losing market share on their major customer as they secure the next customer, because their major customer and the new customer are in the same industry, technically competitors. Please comment on AEM. So AEM, that one's a bit of an unknown. I think, okay, second quarter, like we mentioned last week, earnings is still going to be bad. We think they're probably not going to guide very strongly. So maybe that's the best time to buy into AEM. Yeah, and they just got the new CEO, and also all this, they're still in the restructuring mode in a way. Yeah. What's your view on NEO? Okay, I'm going to leave that to Jonathan. And then comment on Hong Kong Land. I think Hong Kong Land is promising because they got I think they're trading 60 or 70% price to book, but you, like all things, you really have to have a very long-term view. You have to take the view that the office market, although weak now, I think 10% vacancy rate, it will eventually recover because supply will contract. Not this year, there's still supply this year, but from 2025 onwards. So this one is really the best time to buy. I mean, you buy when everybody is so worried about Hong Kong office, right? So yeah, but just that you have to take a longer term view, because I think the share price will only recover if people see some visibility that the vacancy rate starts to shrink in Hong Kong. Yeah, you may not see it this year because there's still some new supply coming on. Yeah. Again, all this is just comments from Hong Kong Land themselves. Yeah. Okay, I hand it to the rest, then we can do TA. Yeah. Ambrish and John. Yeah.
Yeah, sure. Maybe I'll take this NEO question. What's your view on NEO? Is it a good stock to trade or invest? I think it's probably a better stock to trade rather than. So we're still not quite sure what NEO is all about. I mean, they did post pretty good deliveries numbers that came out a few days ago. But in the grand scheme, I think when you look at the EV industry, especially for where NEO is, it's more on the premium side. At least mass premium. Competition is very stiff in China. You look at the 2 biggest players there, Tesla and BYD, are probably still far ahead of the rest of the EV manufacturers there. So if you're trying to invest in a company like NEO, I don't think they are profitable yet. I'm not really quite sure about their business model, about changing batteries and all that. And when you look at the scale relative to its competitors, it's still relative. I guess it's considered a more niche product in that sense. So yeah. So short answer would be better to trade, not so good to invest. That's all. Hope that helps. Maybe I'll pass it on to Ambrish.
I think for NEO, we also worry their model, right? The model of replacement batteries. That means the risk of the battery is actually with NEO rather than the car company, right, John?
Yeah. So it's all those factors combined that I'm not quite sure. I'm not even sure NEO is very sure on what is their actual business model, whether it's that sustainable. So yeah. I hope that helps. I hand it over to Ambrish for India market.
Thank you, John. Thank you. So can you give your feel on Indian market? Good to get in, and roughly what are the risks and challenges? So basically, right now there has been a strong momentum in Indian markets this year, and it has been trading around the all-time highs. And it's also witnessing a pre-election rally, and the results of the elections they would be declared tomorrow. So it's most likely that the Modi it would get its third term, and also it's likely that the government it's more or less likely to get about over 300 plus of seats from the 543 seats that have been contested. So, and yeah, overall the government spending, it has also been strong, and the economic reforms have been stable and they have been improving. And in terms of risks and challenges, it does faces like risks from global recessions and any the adverse developments from geopoliticals. So I hope that helps.
Yes, Zane, you can take over.
Okay, thanks, Amrish. Yeah, I'll just start sharing with you what some background is. Okay, so first I'll start off with AMD. Okay, so AMD, I think currently it's still doing some range consolidation. Good thing is that this price resistance at 161 is still holding as support. For now, resistance around 172. So I think for now, likely to see still some sideways action. Then if you can break out of 172, maybe we could see price test about 183 again. Okay, then next up is on the applied materials. Okay, so for applied materials, I think price action is still quite bullish. Generally still trading this uptrend channel and price breaking above the previous resistance at 213, holding out as a support. So I think we'd likely to see some rebound taking place for applied materials going ahead. And next up, I'll talk about Apple. Okay, so for Apple, I think currently it's doing some range consolidation at a resistance of 192. I think there's quite likely that I think price could break out this resistance since we are still seeing strong momentum over here, higher lows into resistance. So the next level to look at probably would be around 196 as well as 199 as the next resistance levels. Okay, the next one is on Tesla. Okay, so for Tesla, I think some consolidation for now. Price is still bound, I think bound by this downtrend resistance line here. But generally we're still seeing same lows at around 173. So I think probably still some further consolidation. Then if price could break out this resistance at 180, 182, then maybe we could see a retest of 186, 187 again. Then next up, I'll talk about ARM. So for ARM, I think is trading in this uptrend channel over here. Price action is still good. Recent breakout of this resistance at 116, 117, holding as a support. So I think price could still head higher towards 103, 130 in the near term. Okay, hi, PY. TA for Bank of America. Okay, Bank of America, I think, yeah, it's still looking good. Since the breakout of the resistance at $38.30, the retest on Thursday last week, and then we had rebound. So there, I think the uptrend is still likely to continue. Next resistance level is around $40.20, 30 cents, but I think that's quite a small resistance. I think the next key one that price will hit will be around close to $42. Then the next one is on Corning Incorporated. So for Corning, I think uptrend is still quite steady over here. Still seeing higher highs being formed. Since breaking out the resistance at $35. So I think with that price, I think it should be able to continue getting new highs. Maybe the next resistance will be around $38 to look at next. And next one is 2333, which is Great Wall Motor Company, Hong Kong. So for this, I think it broke out of quite a long consolidation. The resistance of $12. So I think for now it could be doing some range consolidation first. But I think it should be able to extend its uptrend with this fresh breakout over here to maybe $16 or $17 in the future. Okay, so maybe some consolidation first, then afterwards if there's a break above $14.20, then price could likely to extend its uptrend. Okay, then as for some of the other US banks, Wells Fargo. So Wells Fargo, I think is doing some range consolidation recently. We had retest of the support at around $59. So with that, I think we could see some rebound towards maybe 61, where there's some near-term resistance over here again, and some sideways price action thereafter. As for JP Morgan also did a retest of prior resistance at 199, then some sideways with a bullish close on Friday, breaking above this short-term consolidation. So I think with that, we could see this JP Morgan extend its uptrend over here to actually retest the 205, 206 level or make new highs ahead. Okay, next one is on Google, Alphabet. Yeah, so for Alphabet, a bit of a range recently, but I think this Friday we saw a retest of this prior resistance break of 172 holding as a support. So if price should be able to rebound over here and maybe test the recent resistance at about 178 to 180, and maybe some sideways consolidation again first. And next up is on Costco. So for Costco, generally price is still maintaining uptrend. Recently, this prior resistance at around 780, 790 is managed to hold as a support with this hammer on Friday. I think still very positive. I think likely for price to actually extend its uptrend to see new highs ahead. And next one is on Johnson & Johnson. So for J&J, generally price is trading this downtrend over here. Looks like a breakdown of this bearish flag over here. So I think just could be just a retest over here at 147. Then price could still face some selling pressure in the near term to actually maybe retest the recent lows at about 143 again. And for United Health, some pullback recently, but it's currently it hit this support level for about at 480. So with that, I think some rebound is likely to take place towards 500 about there. Then there might be some short-term resistance over there. That where price could do some sideways consolidation. And then for Merck, I think for Merck, it did a retest of this trendline support over here, as well as this horizontal support level. This is about $123, $124. So I'm expecting some rebound to take place from this confluence of supports towards the near-term resistance at about 128. Yeah, 128. And okay, hi Simon. Some TA for Vertex Pharmaceuticals. Okay, Vertex Pharmaceuticals also looking good. Broke out the prior resistance high at 440, did a retest over here, and then subsequently had bullish close on Friday. So I think we are likely to see this uptrend actually extend going ahead. And for Amgen, I think for now likely to do a bit of a range consolidation. So we're just holding between 295 to 315 for now. Recently it did a retest of the support again, saw a rebound. So yeah, I think we likely to see price do a further rebound again, maybe towards the range resistance. Next one, Eli Lilly. Well, Eli Lilly is a bit of a range over here for now, but still holding well above this range breakout of 790. So I think if price could break out this resistance at 820, then we could see the uptrend actually continue to accelerate upwards. Next one is Abbott Laboratories. For now, I think nothing too much in the trend. Still undergoing this downtrend over here, bounded by this downtrend resistance line. So for now, we're likely to see this downtrend actually just continue for the time being. Yeah, then maybe the next key support zone to look at will probably be around 96 to 98. 96 to 98 over there. Okay, then next counter is Danaher Corporation. So for this, also broke above the resistance recently, 285. It had a deep retest over here from support. So I think with still finding support from prior resistances level, like this 250 level over here. So likely we'll be able to see price continue its uptrend to review retest 260 as a new term resistance again. Okay. Next one is on Singtel. Okay, Singtel, I think looking at price action wise recently looks good. There's a breakout above 243, 244 recently. But with the we'll likely do a retest of this prior support at 250 and meet some resistance. So maybe some sideways, could do some sideways again for the time being. Yeah. And for sets, okay, for sets, I think price action is still good after the this earnings gap up over here. So I think we could still see price do a test of these 287 as well as higher levels like close to 290. Yeah. Okay, then next up is for Wilmar. Okay, Wilmar, I think it's still trading in this descending wedge over here. So yeah, nothing has changed, but still looking quite weak. So yeah, the next key support level probably around close to $3. Okay, then next one is on Mapletree Logistics Trust. I think still range consolidation over here. Between about 131 to 139. So yeah, still nothing much has changed for the time being. As for Mapletree Industrial Trust, also in a bit of range consolidation recently. So likely still holding between 217 to 221 for the time being. Okay, then for SIA, I think a bit of a range consolidation recently, but I think still holding out well. This still hold the 665 support level over here is still holding over here. So maybe you see some consolidation with resistance at around 685 or that. Okay, next one is on CapitaLand Escort, also in a bit of a range over here. It's just between 89 cents to about 91.5 cents. So I think for now, we're likely to see some of this range consolidation continue for a while. Okay, then next up is CDL Hospitality Trust. CDL Hospitality Trust also just still has been consolidating in this range for about since 96 cents to about $1. So I think for now we're likely to see some risk range bound formation continue at the moment. Okay, another one, Suntec REIT is also in this range for now. Yeah, just happens to be like a lot of the REITs are currently in a bit of range. Currently between like $1.05 to about 110 at the moment. So yeah, for now still nothing much has changed. Something interesting is the Capital DC, which has been trending upwards. So Capital AC, one of the stronger REITs right now, trading this uptrend channel over here. So also above this 180 previous resistance. So I think slowly it could continue to trend higher towards this next resistance at 190. I saw a comment in the chat by Freddie. Yeah, apologies. Yeah, due to the time constraint and also like many counters, I try to give a quick view. Yeah, but if your time persists, then could give more indicators support like in my reports. Thanks for the feedback. Okay, next one is on Samudera Shipping. Okay, Samudera Shipping, it's still very strong trend counter. But now, after hitting a resistance at 105, some pullback, I think it could likely to do some bit of range consolidation at the moment with support at around 96 cents area. The resistance about 102 and above. Okay, I see. Okay, there's a question on Seatrium, or I think because the counter code S51 is no longer used currently, it will change to 5E2 for Seatrium. Yeah, just to take note. For Seatrium, currently, I think you could see some sort of range consolidation take place as this is holding above this 176 level, which was a prior this support breakdown over here, and subsequently price came back to hold as a support. So that maybe some range bound between the current levels to resistance would be around 187 to the recent high at 192. Okay, then for CD developments, generally still in a very larger range between 550 to about 610. So for now, maybe still a bit of recent weakness in terms of price. We could see maybe a retest of the support over here again, close to 550 before price does a rebound. Okay, then for AEM generally price started to trade in this range bound over here. But I think my view is that a bit more positive in the near term with the higher lows being formed. So if price can break out the 193 to 195 resistance area, there could be some rebound towards $2 to 210 about there. Okay, next one is iFast. iFast is still showing some weakness for now with resistance from this downtrend resistance line. Price also below the $7 key level over here. So maybe we could see this downtrend continue for a while, maybe to retest the support about at close to 660. Maybe we see a rebound afterwards. Okay, then next up is UMS. Okay, UMS currently some rebound taking place after the sell down. I think for now it looks like some range consolidation is likely to take place between 119. Then resistance will be around 125, which was a prior strong support level, as well as close to this opening price of this big sell down over here. And as for Franken looks like still some range consolidation, but I still hold the price action wise is still looking okay. Above the resistance 141, 142 with a high continues to form higher lows and higher highs. So maybe some consolidation first for the time being. Then if there's a breakout again, it could test 157, 158 as the next resistance. Then next up is on Semcom Industries. So for Semcom Industries, price action wise is still quite weak. I'm still seeing lower highs being formed, and then there's a rejection of this wedge over here. So still some resistance around 520 and above. But now we could see price hit slightly lower again to test the support over here at $5. Okay, then next up is Keppel. But Keppel still also a bit of price weakness. Still, price is just for now. I think it's gonna just consolidate in this range between about 660 to about 680 for the time being. And then for ST Engineering, it's I think it's still quite a strong uptrend counter. Recently also holding at the support for 405 over here, which was this break above this trendline resistance. So I think maybe looks like a possible bullish flat consolidation for now. Then if there's a break above the resistance of 420, then the price could extend its uptrend going forward. Okay, for Verizon Communications, I think it's generally some range bound going on, but looks like it could be a break above this resistance of $40.70 over here. We could see price go a little bit higher to test this next level at close to 41.50, 41.60. Then the next key resistance will be 42.50 for Verizon. If you can sustain above the recent breakout. Then for AT&T, looks like a build up at a resistance recently and broke above the 1770 level. So with that, looks like bullish momentum is likely to continue upwards. Look at the weekly time frame. You could see price try to go upwards to test the next key resistance between 1860 to 1880 area for AT&T. Okay, hi Phyllis. Here for the bots ETF. For bots, for now a bit slight weakening in terms of the trend. There was originally a range consolidation over here, but recently price broke below this 31.20 support level to actually reach a lower low, as well as we are seeing lower highs over here. So maybe some continued pullback for the time being, maybe to retest this prior resistance as well as the support level at $30.30. And for Chubb, okay, Chubb, I think it's likely to be doing range consolidation above the prior resistance of $260. So with that, we could see some rebound towards like 275 again to actually do a bit of sideways consolidation for the time being. And 868 will be Xin Glass Holdings. For this, I think recently price action is also good above the resistance of 960. Some consolidation for now, so between 960 to 1050. Yeah. And for 2,800 would be the tracker fund of Hong Kong. Okay, for tracker fund, I think it's likely to be just a pullback during this uptrend. So with that, actually we saw this retest of this 1820, 1830 this prior resistance. Likely to hold as a support. Also reason because there was a range consolidation build up over here. So it's just doing a retest. I think we're likely to see the uptrend actually continue from here. Yeah. Okay, any study on Amazon? I could do a TA on Amazon. For Amazon, currently looks like some weakness into the price. Okay, price, there was a breakdown below this $180 level towards the end of the week. So we could see some continued weakness perhaps towards the next support level at 172. Yeah, 167 to 172 again. Okay, hi Zane, can you use the Fibonacci vertical timeline to do predictions such as when STI will be reaching 3,400 or 3,500? Okay, sorry, I wasn't able to find the function because also I rarely use it, but 3,000, looking at STI's chart, I think there could be likely to be some upside this month to break out this downtrend resistance line. To reach 3,400 is not far away. Currently it's at 3,355 for the intraday high as of now. So I think it's likely to be able to reach it within like the earliest maybe within this week or maybe the next 2 weeks. We are looking at 3,400. Yeah, then for 3,500, I think it's likely gonna take a while more, maybe 3 months away. Yeah, that's my personal take. Okay, for Walmart as well as school. Okay, for Walmart, I think likely is still some range consolidation first, since with this earnings gap up over here. But if price could break above the Friday high of 66, then maybe we are likely to see a price go higher for Walmart. And for Coca-Cola, generally in this uptrend channel over here, so some slight retracement towards the channel support recently and some rebound. So I think we could see maybe price test the recent highs again at close to 63.70, and maybe some slight retracement again to actually continue this steady uptrend. Okay, then for Tencent, currently is some pullback recently to retest this prior resistance at 360, also this swing low over here. So I'm expecting some rebound to take place towards this range resistance again of about 390 about there. And for JD.com, for JD, also currently retested a prior resistance level 116 over here. So I'm expecting some bounce to take place. Short-term resistance will be around 122 to 123, then followed by 127. And for HSI, Hang Seng Index, also quite similar. Their retest of this prior resistance at 18,100, 18,200 over here. So I'm expecting some rebound to take place start of this week to maybe test the recent resistance at 18,800 to 18,900. Okay, then next one is on Baidu. So for Baidu, some pullback recently towards, I think it's a support level. So it will be a retest of this downtrend resistance line as well as a horizontal support level, which has been holding price at $94 about there. So I'm expecting some rebound to take place again at this support. Then short-term resistance will be around $99 to $100 about there. Okay, next one is on 981 SMIC. So SMIC has been I think for now it's likely to be some range consolidation as it gets close to this resistance at about $17.50. Then perhaps you'll see some slight retracement again where support will likely be found at around 1640 to 1680, about there. Okay. Okay, perhaps I'll just go through two more counters as we are close to one. Next one on UOL. UOL still range bound for the time being, so some retracement towards the support again, which is around 530 to about 540. So over here, we could likely to see some rebound again to actually continue this range consolidation. And okay, next one I'll talk on Hong Kong Land. With Hong Kong Land, I think some retracement to the prior resistance at 330, then some rebound taking place for currently. So I expect this rebound to maybe test the range resistance again at this around 355, about there. There may be some consolidation thereafter. Yeah, sorry, in view of time, I wasn't unable to answer all the questions, but feel free to post all these questions in P3, then I'll take it from there. Thanks. I'll just hand back my time to the rest of my colleagues. Thanks.
Yeah, okay, thanks, Saint. I know some questions was asking why is it so basic. Yeah, because we have to run through so many companies under the for technical. That's why I think Zain has to do it quickly and also very basic because there are many questions on the TA. Anyway, on Yangzijiang Shipbuilding still can buy. I guess a bit more cautious. I mean, the stock is really up 30%. So unless you see another big spike in container rates, not sure there could be. I'm not sure about the outlook. I mean, it's all dependent on container rates. Which we don't. It's really up 30% the share price. So that's worry. So a bit more cautious for us. The only one thing, apart from containers, they are starting to gain some traction on LPG gas vessels. Sorry, not very helpful comments. But anyway, any buy view on Singtel? Yeah, so we still have a buy call on Singtel. We still like it. Near term, you will be dependent on them making some disposals to prop up the share price. Because until now, to the results, don't think there'll be much news. It'll be mainly the only news so they're going to get. It's not like a lot of people are rushing to go and sign up for new telco plans. So the news will be mainly from disposal gains that they will probably announce intermittently. But if you've got more questions, I mean, do join our webinar. It's happening next week on the 13th. So feel free to join our webinar with Singtel. Yeah. It's open to everyone. Okay, with that, thanks everyone for your time. Sorry we can't answer all the TA questions, and I hope everyone have a good week ahead. And thanks again for your time and your questions. Take care.